Okay, this video is going along with section 18, section 3, and we're working on taxable income and how they're determining that. So we're just going to look at the textbook to kind of calculate how they're coming up with these numbers. Right here we have the status given, the filing status, and number of exemptions. So here we have a single, a little one in the parenthesis, the number of exemptions. Taxable income was $34,300. They had some adjustments, $2,120, and then the adjusted gross income then is $32,180. They got that by taking the total income and subtracting the adjustments. So it's just a simple subtraction number to get the adjusted. Then they're using the chart on 613, which we'll look at in a second, to determine which is the better option for them, either taking the standard deduction or the itemized deduction. Itemized deductions would be write-offs that you have. Car expenses, business expenses, child care, those type of things might be itemized. And then the total number of exemptions that you have, which is 1 times the 3,800, and then you would subtract the standard deduction in this case, because it was bigger, and your exemption allowances from your adjusted gross income to get your taxable income. And then there would be a tax rate on that, but you want to try to get your taxable income down as far as you can, because then you owe less taxes. So let's take a look at net page 5 for that. So in number 2, they ask you to come up with the income, and you would get that then by, in this case, taking the adjusted gross, adding back in your adjustments to get the total you started with. So on those types of problems, that's pretty straightforward. Just take your adjusted, add back in what you subtracted, and you'll get to your starting spot. Then it's a standard deduction based on this, the married filing jointly or single or whatever, on chart 613. They had some itemized deduction, but your standard was better. Your number of exemptions is based on the 38 times the 3, and then you would subtract your adjusted, subtract your standard deduction, subtract your exemption allowances to get your taxable income. The next section of homework starts with problem number 10, where we're asked to use table 18.3 to calculate the tax liability for the following taxpayers earning under $100,000. So in our example here, we have a single taxpayer making $62,340, and they came up with this number. So let's see how they got that. So we turn to Exhibit 18.3. Since our first two numbers are 62 for the 62,000, we find the 62,000 category. Here's 65 over here, 61's above, and so on. And we need 62,340. Well, 62,340 is going to be between 62,300 and 62,350. It says at least this, but less than this. All right, we are single, which is the first category up here. We have, put this down, we have single, married filing jointly, married filing separately, head of household, and so on. So make sure you're in the right column, and then you would go back down here, find the right column again, and sure enough, our numbers match. Okay, so that's how they're using these tables for those problems. Let's do one more. Okay, number 11 is one of your homework ones, but let's go ahead and do that. She is married and separate. Taxable income is 27,665, and they came up with this number. So let's see how they did that. So we found the 27,000 block. We need 27,665. So there's 650. 665 is going to be between 650 and 700. So we're on the right column here. And we are married, filing separately, which is this third column over. And yes, indeed, our numbers do match. So that's how they're coming up with these numbers. Find the right category for the block, the number of thousand, single, married, etc., head of household, whatever you need. Make sure you line up and then just take your numbers down, find the one you need. You got her. The next section of homework is using Exhibit 18.4 to calculate the tax liability for taxpayers earning over $100,000. So it's a different chart. So here we have a head of household. Our taxable income is $175,800, and our liability is this. So let's see how they got that. All right. So we're going to need to turn to 18.4. So 18.4 has four sections. We have an A for single. We have a B for married filing jointly. C, married filing separately, and then D, head of household. So in our example, we had head of household, so we're going to need this bottom set, and we had $175,800. Well, over in this column, it reads $100,000, but not over $122,300. So we're bigger than that. Next category down is $122,300, but not over $198,50. So we would fit in that category. And we're going to times that then by a multiplication amount of 0.28. So we would then put our calculator up here, and we would have 175,800 times 0.28. Okay. Then notice our numbers don't match here, but that's okay, because then we get to have to subtract this adjustment. So we're going to need to be able to subtract then our $9,024. And now our numbers do match. Okay, so it's using this chart, finding the single, married, household, separately, whichever it might be, finding the right income category, and then multiplying that through, just like what we did in our example. Our last section, it says you are a newly hired IRS trainee and you've been asked to calculate the amount of the tax refund or owed for the following taxpayers. Well, we have a tax liability in number 20 here of $7,525. He had some credits of $1,670. He owed some other taxes of $840. He had a payment, or a total of payments, totaling $5,300. He still owed a little bit. So how do they figure that out? Well, with your calculator, you would take your tax liability. I'm going to try to slide that up so I can get the calculator under here where you can see it. So you would take your tax liability of 7,525, and you would add your other. So we would have 7,525 plus the other taxes of 840. So we get our total taxes. Then we're going to subtract our credits and the payments. And that's where they came up with the amount still owed. Okay? Well, let's do another one. So I'm going to try to hold this here. So our tax liability was 5,320. We had other taxes of 325. Okay, and then we had some credits that back in there. And your payments. Okay, now notice that you have a negative amount. Okay, because you had some additional credits here. So when you have a negative amount on your calculator, that means that you're getting a refund. You're getting money back from the government. So when you're marking stuff here, the amount's what we got, but we're going to circle the refund instead of owe. Before we had a plus amount on the calculator, we still owe that. Here we have a negative amount on the calculator, so that's going to be a refund. So that's that whole bottom section here, refund, the amounts, etc. All right, so have fun with these. They're pretty straightforward math-wise. Just have to be kind of careful.